We are good to go live on all networks. All right, my name is Shateka. I'm going to be not long, but I am going to be strong. My goal is to really just talk about who I am just for a few minutes so that you can connect with me so that I can reacclimate myself with my audience because I know I have been sort of MIA as it relates to doing these lives. And I wanted you to know who I am. So just to tell you a little bit about my background. Good morning. Good morning. I have actually been an Army officer with the military and then corporate executive for several years. And now I am a serial entrepreneur. And the goal is to really help empower other people as it relates to their finances. The reason why I decided to do this is because over my life in my younger years, I made quite a substantial amount of money, working in corporate as well as, previous. And what I did not understand was how to do money. I did not understand how to do finances. But the other thing I didn't understand is that so many people were working and didn't know either. So even doing this business, I understood that people, they really don't understand finances. My major why is I had a couple friends in 2018 that actually passed away from the flu. So what a lot of people are experiencing now with COVID, I experienced back then, right? In 2018, they actually died within 4 days of one another. And it was unexpected, but it was the flu. And long story made short, one of my friends in particular, both of them worked really hard. One was an HR, professional. She was an executive with HR. The other one was a, solopreneur, and she worked a substantial amount of time trying to build her business. Well, long story made short, to me, they never really lived. They never really had the opportunity to really experience life, right? Because mostly what they did was work. And my goal is to really help people experience life on their own terms and not have to live life by default, but by design. So I help people retire before they expire. So if that's you, I'm the one you hire. That's kind of like my tagline, right? At the end of the day, I just want to see people win. And the goal is just to, help empower people in terms of their education as it relates to finances, because you can make a whole lot of money. But what do you have to show for it? So many people are making six figures and even more, and they don't know where their money is going. They don't know how to make it work for them. Well, there's two substantial reasons why people's finances are not where they need to be, because these are what I call, and what I heard someone once say, the termites to finances. The two termites to finances, of course, is going to be what? Taxes and what? Interest. So Albert Einstein says that the person that understands, interest and how to compound money, all right, they're going to make a lot of money. The person that does not understand how to compound their money they're going to pay a lot of money. They're going to lose a lot of money at the end of the day. And so the goal here is to really kind of talk about that. Now, there's 6 steps to financial freedom. And I'm not going to talk about all 6 steps today, of course. I'm not even going to talk about it much today. What I am going to say today is that I want you to join me for the rest of the 6 days, right? Each day, I'm going to really focus on each of these 6 steps. And so you'll be empowered to understand what they are. I want you to share this if you haven't already. This is the only broadcast. It's going to be a replay. There's not going to be a replay over the next 6 days, right? Over the next 6 business days. I won't be on here Saturday and Sunday, but I'll be back on Monday. I want you to share this because people need to know how to level up in their finances and so much more, right? I want to talk a little bit about the call to action today is to really, get on a call with me so that we can have a conversation and a deep dive in terms of your needs analysis if you have a need for one, right? Because at the end of the day, it's complimentary. There is no cost for that. My goal is to see how I can help you to retire sooner than later. Okay. Most people that I talk to, and even my goal was to retire at 40, but people are actually retiring earlier than that. They're retiring in their 20s. Okay. Because what they're seeing is that retirement is not an age. Retirement is an income. And so when you realize that it's an income and it's not an age, then you do things differently, and you try to figure out ways to do your income. So what are some streams of income that you could generate so that while you are doing, say, your 9 to 5 or your career, you can begin to have an exit strategy so that you can actually retire. 97% of people do not retire, if not more. And so you want to see yourself retire sooner than later. At the end of the day, what I had to learn in financial literacy is that you're in like one of the highest brackets as a W-2 employee. Nothing wrong with it. I had a great career. What I said, I've led quite a few people, and it was great, but I didn't understand I knew that I was single, didn't have any children, so I was in a higher tax bracket from that standpoint. But I didn't understand that as a W-2, I was in a higher tax bracket because of that. So that is why most people say get a job, stop having a job, or get an actual business, so that you can be able to do some write-offs. There's 475 write-offs that you can take whenever you're a business owner. And a lot of people don't know that. They don't even understand that because they are so ingrained with their careers. And again, nothing wrong with a career. But will you ever be able to retire from that career? Because do you have financial literacy that you need to know in order to be able to do just that, right? So I just want to say that day one I want to talk about is going to be cash flow, right? So one of the reasons why a lot of people suffer in their finances is because, of course, they use credit cards or they may take out a loan or whatever the case may be. And in doing so, they never really get to pay off debt. So the debt is really eating away at their finances. The interest on the debt primarily, right? Because it just gets worse and worse, especially if you don't pay it off sooner, right? So how do you get around that debt? How do you get around having to use a credit card? How do you get around having to use, a loan, right? I want to say this one thing is that you can compound your money in a policy, right? A policy. This is what the rich and the wealthy do. I'm just teaching right now. The rich and the wealthy do not go to credit cards. They do not go to loans, right? They become the bank of their money, right? They become the bank of their money, right? They do business like the banks do, like what Walt Disney did, Sam Walton did, Jeff Bezos does. The people that don't pay taxes, they have a policy. And what they do is they let their money, stack up in what's called a paid up addition on a policy. And when that happens, they actually get to take out, emergency funds from their policy. Or if they just want to take it out, they can. Why? Because when you take out money out of certain types of policies, it's tax free, right? Right. It's tax free. There's no interest on that, right? Because it's a policy. And oh, by the way, if you get sued, you don't get to take your policy. They can take your 401k. They can take your IRA. They can take all these other financial vehicles, but they cannot take your policy. So there's a whole lot of protection in a policy, but the most important thing is when you have cash flow, you don't have to worry about it with a policy. It is continuously going to build value. And I know that most people in the community that I came from understood this whole thing around, buy, term, and invest the rest, or they'll want to do just a final expense. And the only thing that they see a policy for is a death benefit. Let me educate you a little bit more on that and why the wealthy understand that a policy is the way to build wealth, right? And cash flow. We're talking about day one, because I said there's 6 steps to financial freedom. The first step is cash flow, making sure that you have enough cash flow, right? And they understand that when you're when you're working with a policy, you don't have to pay that money back. But if worst scenario, you don't have to pay it back, but you can pay it back and then let it continue to build more cash value, of course, right? So what you have to realize is that you are in control. You are in control of your money. And those funds is yours, right? They're going to continue to accrue. There is no loss. There is a loss in a 401k. There is a loss in stocks. There's a loss, right? There is no loss in a policy. When you buy, term, and invest the rest, the reason why that's so attractive for the insurance company and not yourself is because they're making a lot of margin. And margin is pure profit. Why? Because there are only 2% of people that pay on a term policy will receive a payout. Hello, breaker. Somebody always says, "Not can I wake you up this morning?" I know it's early in the morning, or you may be catching this replay only today only, because it won't be a replay the next few days. But when you have those funds, and you're paying that into that term policy, first of all, a term policy is going to terminate. You will outlive that policy. So you will have donated that money. Okay. You will have donated that money to that insurance company. And I understand that it fits some people's budget. I get that all day. Some people's budget, that's all they can afford. Some people, they can actually afford more, but they choose to only afford that amount for a term policy. And they choose to donate it to the insurance company. And they choose to understand that it's only going to go up in the future, right? Because what the term policy does is it only goes up in the future because your insurability is only insured for that amount of time. So 15 years, 10 years, whatever. One thing I'll say about a term policy is if you're going to have a term policy, make sure it does 2 things for you. Number one, you get a return on your premium. You can get a 100% to 65 to 100% return on a premium depending on which insurance company you're with. Okay, after 15 years, 20 years, 25 years, all that money is refunded depending on which policy you have or which company you're with. So make sure it has a return on premium. Number one, if you have to have a term policy, because we already know is a donation, right? We just talked about that, right? Okay. Number two, make sure that it can be what? Upgraded. Why? Because you want to make sure that you're locked in terms of your insurability. When you're younger, you have less health challenges, you're insurable. When you're older, your insurability is jeopardized. So you want to make sure that it can be converted to a permanent policy that builds cash value that can actually leave generational wealth the way the rich and the wealthy are already doing, right? So there's a guaranteed death benefit for the entire lifetime versus a term policy that you will outlive, that you will outpay, that's only going to become higher, right? And that you're going to see a decrease in coverage over time because it's going to become more expensive. So they don't tell you that part when they say, buy term and invest the rest. Invest the rest. Let's talk about that part. Most people don't even know how to invest. So who knows how to invest better than anybody? And who does the banks rely on to invest better than anybody? The insurance carriers. They know how to invest very well. There's companies out here in insurance doing 27% increases. And the rich and wealthy know that. The 1% people that invest know that. So they would prefer to allow some of their funds to be in an insurance policy where they know there's no loss. They know there's only gain. They know that it's tax-free income in retirement. Okay, they decide to do that in retirement. And there is taxes on all these other vehicles that you have for retirement, right? So that's one thing that most people don't understand and they just need to realize. And so, I realize that most people don't know that. And that's the reason why I'm coming on live to share. And that if you can help me help other people understand this, that's the only thing that I ask people to do that's actually watching, right? So again, I started this journey, with financial freedom and financial wellness and all that good stuff in 2019 when I hosted my first Generational Wealth Symposium. Literally, if you went to generationalwealthsymposium.com, you would see that, right? That's back in 2019. We had about 225 people that attended live, right, in the city of Baltimore. It was amazing. What came out of that is that people really needed it and was really grateful. And people told me that they would have easily spent $500 to be there for that entire day of like 10 speakers, round robin in 4 different rooms, right? It was for free. And why would you do that for free? Because you want more people to attend and more people to get the content and more people to experience it, right? But at the end of the day, what I've realized is that people don't respect free. They don't respect it. Oh, they don't respect it at all. They think that there's no value because it's free. So what we have to do as entrepreneurs is begin to charge, right? So if you're a small business owner out there or anyone that's, an influencer, you realize exactly what I'm talking about because you probably try to do some things free. People do not respect free. I see inclusive data saying, nope, yep, they don't. So at the end of the day, I decided that I'm going to package this information because I know what I'm giving is the tea. I know it. I'm dropping gems, even though I'm only talking about one topic today, and that's cash flow and how to get your cash flow, right? How to compound your money the way the rich and the wealthy do. All right. And so that's how we do that. Now, if you have some questions about that, you can certainly reach out to me. You can actually do a consult. The only thing that I am going to still do for free is, of course, going to be complimentary consultations because I just believe that everybody's situation is different. And I want to make sure that I reach out to everybody and where they are, right? Because some people just can't afford, right? And it is okay because I believe that we are blessed to be a blessing. So sometimes we are going to sacrifice and give some things out for free. But the replays of this, I'm going to package it up, right? So tomorrow I'll be on here talking about day number 2, step number 2 to the 6 steps to financial freedom. Make sure you invite somebody, tag somebody, because there will be no replays, right? So I'll be on around the same time in the morning, 7:30 a.m. during these business days, right? And I'll be talking about the other 5 steps to financial freedom. And there will not be a replay. But I did want to say that we're at the beginning of April, right? So welcome to the second quarter. Yesterday I ran a special because I am a life insurance broker. I didn't mention that as I, kind of introduced myself. I am a life insurance broker, right? What's the difference between a life insurance broker and a captive life insurance agent? Because you need to know the difference, and you need to ask the person that you deal with when it comes to insurance who they are. Okay, are they a captive agent that only can sell certain products, or are they a broker that can sell you any product based on what your needs are? So what happens, and let me help you understand the process of how we do business at House of Financial Solutions. We give you a form, that's called a needs analysis. And basically what you're going to do is you're going to list all your debt, like everything. I'm talking about IRS debt, student loan debt, mortgage debt, all of that. What we have is certain policies that will definitely give you your financial freedom date. Most people don't know their financial freedom date because they don't even know how much interest they're paying. I had a gentleman that I, gave this exercise to do. Go find out what your interest rate is on all your debt. He didn't know he was paying 23% interest. Will he ever have paid that off? Probably not. So I challenge you, if you never do business with me, understand what your interest is that you're paying on all your debt. That is a first step to doing business with me. And what I'm going to do is take the needs analysis and I'm going to shop, for the proper policy for you based on what you can afford, based on what I'm seeing in your needs analysis sheet. The needs analysis has two parts. Number one was all of your debt. Number two was all of your assets. I am a financial planner. Somebody asked me that when I first started doing lives a while back. And so I will help you plan out your debt-free date, as well as, here's the deal. You don't pay off your debt and then build up for your retirement. You do them simultaneously. That's the way these policies are structured. You're going to be paying off debt all along while you have what? Living benefits. This is the difference between the old mindset and the old paradigms around life insurance. Oh, it's just a death benefit. That's all it is. And oh, the beneficiary gets everything. Not so. We have living benefits now. They're called riders. Let me tell you about these living benefits. If you become chronically, critically, or terminally ill, you will receive up to 80% of your death benefit. Okay, so let's say your death benefit is $500,000. You can receive up to that to pay off your medical expenses. Most people they become bankrupt in retirement, unfortunately. All right, because they're paying all these medical bills, medical challenges that they didn't even expect. Okay, but you can actually what's called accelerate your death benefit in a policy if you have the right type of policy, and that can pay that off. We had a young lady that had cancer. She needed $80,000 for her formula. She was able to basically write that off and continue to live. Okay, you have a stroke, you have dementia, you need long-term care, you become disabled, all of these different things. You get to use this money that you put into this policy as a living benefits as you accelerate your death benefit for that chronic, critical, or terminal illness or chronic injury. All four of those things, you can actually access those funds and it's tax-free, right? You can also access those funds for tax-free retirement income, like a pension. I actually have a particular policy that for every dollar you put in, it gives you $3 back. Hello, somebody. For every dollar you invest, it's an automatic $3. Now, of course, that individual has to be someone that's a six-figure earner, or they may have to be in a household income of six figures. Either one, right? Then they'll be able to, number one, those are the two requirements. One, they need to be healthy to be able to basically be able to apply and be considered for that policy, but also they need to be a six-figure earner for that particular one, the 1-to-3 match. So that's another policy that's out there. There's all types of policies out here. The other thing that you can look at, like we talked about already, what a policy is cash flow and emergency funds, right? So you want to make sure that you have 3 to 6 months of emergency funds. Why stack that up inside of a bank account that's not going to give you anything when you can do a policy for about 5%, compounding interest or more? Some doing up to 6.45 is what they're actually writing it out at, right? But some of those policies actually go on to do very well because they don't have a cap on them. Some of them even go up to do 20%. But how much are you making on a term policy, right? So, excuse me, like I said before, and I'm going to repeat that one more time. If you have a term policy, you want to make sure that it does one of two things. It actually does two things. One, that you'll be able to get your return on premiums. You'll get your money back after 15 years, 20 years, 25 years. whatever the case may be. Number two, that it's upgradable, that if you wanted to do a permanent policy that you can get that cash value built up and so that you could have generational wealth. This is how you build generational wealth. It is not all these other things that you hear out here. Generational wealth is built through insurance policies. If you don't believe me, ask Walt Disney. If you don't believe me, ask J.C. Penney. If you don't believe me, ask Sam Walton, ask Jeff Bezos, ask Warren Buffett, a billionaire. If that's how they do generational wealth. It's through policies. It's not through a term policy, okay? And it's not through a final expense. I learned the math on final expense yesterday. A couple could do a final expense type policy and they will pay $40,000 over their lifetime on average for a $10,000 death benefit. Are you kidding me? Are you kidding me? We got to know the math on these policies. So only 2% payout on a final expense policy, only 2% payout on a term policy because you're going to outlive it, right? Because only for a temporary season, you will outlive a term policy. You won't have to renew it. And oh, by the way, it's going to increase on you because your health could possibly, and you're going to have to get what? Reinsured, another test, medical exam or whatever the case may be. If you are somebody in the military, if you are somebody in the government, you have a term policy. When your relationship ends with that military, I'm a veteran, combat veteran, by the way, all right? When you leave the military, and I've heard some stories, unbelievable. And when you leave that government with the good benefits, you won't, your term policy that you have with those organizations, they're going to increase when you get out, and your coverage will decrease. If you don't believe me, go and check it out. It will decrease on you, and what you're paying is going to increase. And it's still just a term. It's still just a donation. So you want to, while you're working on these people's job, because you're not married to the job, you may be married to them, but they're not married to you. Okay, because whenever it's time for you to go, it's over. Your term policy is gone. So you want to have some protection while you have insurability at a younger age, that when you get older and you can't be insured, possibly because of other medical challenges, get it while you can and get it at the lowest cost possible. Okay. When you're younger, you pay less and you get that rate locked in for the entire lifetime. Okay. But when you're older, it's a whole lot more for the lifetime. So let's be really clear on that. Right. One thing I want to say that you talk a little bit about is some myths. There's a lot of myths out here about, insurance, for example, mortgage insurance. People think that, oh, I got mortgage protection. That is not, that money is not coming to you to pay off your mortgage. That money is for, if you default on your mortgage, the mortgage company, they don't have a loss. If you default on your loan, that is going to benefit the mortgage company and not you. Okay. Let's be real clear about that. The other myth out there is that, oh, I got accidental death, through your bank. You paying $10 or whatever a month, $5. Hello, somebody. You are not going to get a payout unless you die in an accident. If you don't die in an accident, you're not going to get a payout. So this accidental death policy that you have is bogus, because unless you die in a airplane crash, helicopter crash, on a road driving somewhere, you're not going to get a payout. Be really clear about these policies. Read the fine print. And the cost to do insurance. If you have a policy already, I am going to challenge you to go back to your insurance broker or captive agent I'm going to define those again, and ask them, where you stand on your policy, because a lot of people are paying in these policies and they don't even have a policy. There's a lady that took out a loan. She took out like $600. She don't even have a policy no more because it was like negative investing, right? Like long story made short, there's a cost associated with insurance products. Some have more costs than others. So when the offer is made for you to receive your policy, it's like almost buying a house. It's like a 28-page document or more, depending on which carrier you're with. You need to understand those 28. You need to understand the intricacies of the 4 pages that is the most important, like the cost of insurance. If you don't understand the cost of insurance, you could possibly lapse in your insurance, depending on what style of insurance you have. And every situation is different, right? But when you understand that, you do your annual review with your life insurance broker, you know where your policy is, and you know whether or not your cost of insurance is eating away at your cash value. All right. So that's super important. So with all that being said, I just wanted to say that again, my name is Shateka. I help people retire before they expire. So if that's you, I'm the one you hire. And the number one vehicle I use is going to be a policy that's going to be able to pay you out tax-free retirement income in your retirement years. All right. I love it. I can do a consult with you to illustrate to you at your age what you can make. The one policy that I was talking about where there was a $3 to $1 match, the gentleman, this is a 30-year-old male, for example. I'm just going to use this example. He puts in $20,000 for 5 consecutive years. The bank is going to match him for those first 5 years. Year 6 through year 10, the bank is going to put in his portion and their portion. Okay. So that's where the 3-to-1 match is. Okay. And at year 15, okay, there is done. That is it in terms of the obligation, right? When he's retired in his retirement age, he's going to receive $145,000 per year. Where do they do that at? Where are they doing pensions that pay out 6 figures, right? Like, who's doing that right now? Okay, so you can create your own pension plan in an insurance policy. It doesn't have to be that style of a policy. It can be some other styles of policy. And as a broker, we have access to all kinds of policies to fit all types of scenarios and situations. People are buying their homes with their cash value buildup in their policy. One young lady, she pulled out $3,000 out of her policy, bought her first home. The next year, I don't know how this happened, but she had over 6 figures in her in appreciation. Over 6 figures. I was told it's 300,000, but that's hard to believe. A lot of appreciation. So real estate, you can actually you can purchase, take the cash value out, of course, and use it for whatever you want to use it for. I know a luxury event planner, the weddings that she's doing is 6 figures easy. And those people are bringing her all type of policies to pay off their children's wedding so that their child don't have to worry about it. So the policies, they can be used to build businesses. You can do a paid up addition in your business. Let me talk about that for a quick second. I talked about most of what I was talking about was for the personal, right? Let's talk about business owners, small business owners. And this is how Walt Disney was able to grow and just do some research on how businesses have grown because of policies. Okay. So instead of them going to a bank and taking out a loan, even real estate investors are using policies to go and buy and purchase properties, right? But if you have if you're a small business owner and you want to be able to have that access to cash, you don't have it. You can start putting money into your business's policy, and when you do that, you can actually have a build up and to such an extent that you don't have to go out and get a loan. And guess what? It's a tax write-off in your business. I told you the businesses have 475 tax write-offs. That's one of them. So you could put your money into a policy. It's called key man insurance or key person insurance or buy sale agreement or executive bonus. This is what these things are called, right? So I just wanted to really talk about, let's see here. Okay. Yes. All right. I see inclusive data. She's been talking to me the whole time and I wasn't able to see some of her comments, some really good comments on here. People don't respect free. At the very least, make sure people leave reviews, literally all the attendees to leave reviews so we can build clout, increase the credibility factor. Very good. Very good. Reviews are certainly important. So I definitely want people to leave reviews. And so, yes. So I'm going to reset really quickly and I want to end. But what I want you to do is schedule a consultation so that we can get together. I am running a special for the first 3 people that reaches out to me. I'm going to do a 25% off on their policy. I can show you what the policy would cost you. And over the time, 25% is significant. And I'm only going to do it for the first 3 people that reach out to me. If you're watching on Facebook or LinkedIn or YouTube, you're going to see a ticker going across the bottom of the screen. That has my phone number, 843-830-1509. You also can go to www.shateka.com and you can book your consult there. So those are the ways that you can reach out to me. I'm going to be going live until I get through these 6 steps to financial freedom. But I just went over step number one. I will leave this up as a replay, but over the next 5 days, business days, I will not leave the replays up. All right. So make sure that you're on live with me. They will be at 7:30 a.m. Eastern Standard Time tomorrow as well as next week. Thank you so much for tuning into this live, and I will see you at the top because you belong there. God bless you. Enjoy your day and happy new second quarter. Let's go win on purpose.